Welcome everybody to Sikich Salesforce Live. This is episode 8. We are at the end of summer, just the beginning of fall. Weather's turning really nice out there. And we are going to be talking about how private equity and investment banking use Salesforce. And to do that, we have a special guest with us today. We have Randy Davis. He is a partner at Sikich here. We'll bring him on and welcome him to the show.
Well, thanks, Ryan. As Ryan mentioned, my name is Randy Davis with Sikich. I came to Sikich last October through an acquisition of NextGen Consultants, a Salesforce Gold partner. So I've been working in the Salesforce ecosystem for about 12 years as a solution architect and a consultant, and working quite a bit in financial services, and including quite a bit of work with investment banking and private equity firms over the years. So looking forward to our conversation today.
So, just knowing that, I think you can nail this question here. What do private equity firms do?
Sure.
How does that all work in context here?
Yeah. So private equity firms, and I refer to them as PE, refers to capital investments made into companies that are not publicly traded. And these investments provide a potential payoff to the private equity firm and to their investors. So here's how it works. Private equity firms raise money from investors into funds, and each fund has a unique attribute or purpose that represents the niche or the specialization of the private equity firm. So, for example, to invest in growing medical device companies. So money from those funds are invested in portfolio companies, and the process starts with a formal evaluation process, often called a deal, where the PE firm assesses the potential payoff of making a significant capital investment in a company. And once an agreement to invest is reached, the company becomes a portfolio company of the private equity firm. So there are two sides of the business. First is the investment team or the fundraising team. Second, the deal team, which are research analysts in the firm, and they play a major role in deciding the deals the firm should invest in. So the investors are typically institutional investors, such as pension funds or insurance funds, along with high net worth individuals. So typically these are investors in a position to make very large investments and are willing to take on significant risk, but also with the potential of a very high return. So the idea is by making a significant investment in a portfolio company, the portfolio company will achieve higher growth and profitability, and part of the return goes back to the private equity firm and the investors. So PE firms make money for themselves and for their investors by leveraging their market knowledge and relationships in the niche or specialization they serve, like, for example, medical device companies that we referenced earlier. So there's quite a few variations off that core model, but that's the primary core model.
And I'm sure there are quite a few medical device private equity firms out there, just in light of recent news and things like that.
Sure.
But there is a flip side to this coin, the flip side to this episode today. So the investment banking side. Can we go into a little detail about that?
Sure. Investment banking is, closely related to private equity, but not the same. So investment banking firms, and I'll call them IB, engage in M&A activity, which stands for mergers and acquisitions. So they're engaged by either a company desiring to sell their business or a company desiring to buy a business. So an IB firm will refer to these engagements as either sell side or buy side. So they could also be engaged in an activity called a roll-up, and that is to consolidate multiple companies into one. So the idea is the buying and selling companies, or the roll-up, stands to gain by increasing the equity value by combining the companies. In other words, the value of the combined entities is higher than the sum of the companies individually. And the IB firm, they make money from transaction fees, and they earn it by applying their expertise and relationships in the markets they serve, where they conduct M&A activity.
Fantastic. So these companies handle a lot of financial transactions, things like that. So what are some of the central IT challenges for both PE and IB?
Yeah, I mean, there's quite a few, but I'll highlight a few of them here. One of the most common is they really lack a centralized way of tracking their business processes. So, for example, in a PE firm, they may not have a structured way to do outreach to potential investors in a new fund, and they may not have a way to centrally track and monitor the results of the outreach, or they may not have a way to track the fundraising pipeline, or at least in a very structured and rigorous way. Another common challenge for private equity firms is they may not have a way to centrally track and manage their deal flow and their ongoing communication with their portfolio companies. For investment bankers, they may not have a way to generate a buyer's list for sell side work. So based on the appetite of potential buyers. So once a buyer's list is defined, they may not even have a way to track the follow-up in a kind of cohesive or structured way. Also, they struggle, frankly, with overall calendaring and task management, especially when the private equity deal teams, when they need to stay closely aligned on schedules and tasks as they work on deals together. So there's more, but I think that whole concept of centrally tracking their entire business process end to end and is a big challenge for some of these firms.
That sounds kind of high stakes to go without those kind of solutions. So how do those companies cope with, outside of any solution like a Salesforce?
So is your question more about the way that the Salesforce solution or some of the proposed ways that these firms have handled these issues, or?
Yeah, like how do they do they just do this all in spreadsheets currently? Is this all written down in like a notebook? Like how?
All of the above.
How archaic are we talking?
We've seen it all. We've seen Excel spreadsheets. We've seen written notes in notebooks. We've seen them trying to manage their entire business process in Outlook or Gmail. And I can't even tell you how inefficient it can be. And it really causes a lot of headaches for these firms.
That's gotta be headache inducing when you see that.
Yeah.
So let's bring in Salesforce to the kind of the conversation here. So what are some of the capabilities that PE and IB get with Salesforce?
Yeah, so the beauty of the Salesforce CRM, and especially the Sales Cloud, the core data model is so easily extended to support end-to-end business processes for both private equity and investment banking. So, in a PE firm, outreach to potential investors in a new fund can be supported via Salesforce Sales Cloud, just core marketing capabilities. They have a central way of tracking responses to the outreach. And if a potential investor shows interest, the firm is able to track the progress all the way through the fundraising process using Salesforce standard opportunity management. We've also seen private equity firms track the fundraising efforts even further into what's called the actual LP commitments, or when an investor makes a commitment, and then the capital call, which is the step when they actually release or submit the funds into the private equity firm's fund. And we've seen this all centralized and managed in Salesforce. And that's just on the fundraising side of a PE firm. And on the deal side, just with basic configuration of native Salesforce and process automation, they're able to track and report on deal flow by the deal team. So the deal team benefits with a kind of a centralized or common view of active deals, and that really helps foster collaboration along with calendaring and task management as the deal team is focused on managing a single deal or sets of deals. Another big area, Ryan, is integration with Outlook and Gmail is a huge benefit. Because a lot of these firms, they rely heavily on email for communication. But the benefit of Salesforce is they can take this email traffic and they can relate it to specific deals or fundraising opportunities or investment banking projects. And so they gain big efficiencies by being able to track the email traffic to a specific project or a deal or a fundraising effort. And then if you add to that, the process automation the Salesforce offers, the centralized security model, the reports and dashboards, third-party apps on the App Exchange. I mean, Salesforce really offers everything a private equity firm or an investment banking firm would need to run their entire business on an IT platform. Probably though short of the very detailed accounting and financial tracking and infrastructure such as email. So we've seen these firms use basically Salesforce for the entire end-to-end process.
I mean, that's a lot of capabilities.
Yeah.
Can you think of like some clients that you've worked with, or some people within the PE or IB industry that have seen, very quick rewards from taking advantage of some of those capabilities?
Oh, for sure. Yeah. Let me give you a couple of examples. In the private equity world, one of the most common is deal tracking. All the way from a potential deal identification to tracking the deal through multiple steps in the due diligence process. So you typically see, the steps to go through due diligence to a letter of intent to a letter of commitment with very distinct milestones. And along the way, they're gathering information on the potential portfolio company. So it's still in the deal stage now. They're still looking at it. So they're assessing, let's say, the financial metrics of a potential deal. What's the revenue and EBITDA? What are the market strengths and weaknesses? What's the last 12 months run rate on profit? This is all things tracked on the deal stage, and it's all tracked right in Salesforce. So we typically build out the deal capability or the deal module within the private equity template to allow the deal team to track end-to-end their entire deal process, all the way from inception to them becoming a portfolio company, then also managing the portfolio company and their communication through Salesforce. So another example is the weekly deal report. So this is really a centralized view of the deals and all the related activities across the deal team. So typically, the deal team has, a dozen or so active deals they're working on, let's say. So they use third-party merge tools to create a weekly deal report in exactly the format they need. And the weekly deal review meeting is one of the most common, most critical functions for the deal team. And having a standardized formatted report all built with Salesforce data off the deal page is a requirement for the PE firms that we work with. And let me give you an example in investment banking. One of the most common advantages using Salesforce to track the communication and status of the buyers list. So let's say it's a sell-side engagement for, let's say, a medical device firm. Okay, Salesforce can be used to generate a buyers list, based on the interests and appetites of the potential buyers profiled in the CRM. So potential buyers can be profiled based on their strategic or financial interest in an acquisition, such as its target market or certain financial performance metrics around revenue or EBITDA within that market, or profiles of potential strategic buyers and financial buyers can be built in Salesforce, and it becomes a really, really rich source of data then to be able to build the buyers list for a particular potential transaction.
So are there any untapped areas where you feel Salesforce could be used?
Oh, for sure, for sure. I think one of the biggest untapped areas is communities, and the Salesforce community allows customers and partners of our clients to access their Salesforce. Now, of course, it has very distinct security rules around it, but I also think it's an untapped area for private equity investment banking firms. So, for example, a private equity firm could deploy a community and have their portfolio companies access it to be able to exchange financial and other information on the ongoing performance of the portfolio companies. So you can imagine, Ryan, what's so crucial to a private equity firm is how the portfolio companies are performing. Well, with a community, a lot of that could be done right in Salesforce, where the private equity firm, the portfolio company, could exchange information, documents, collaborate with features like Chatter with their portfolio companies. And I think that's kind of an unrecognized, untapped area that I think we're going to see some growth in over the next few years for these firms. Same with investment banking. Let's say there's a sell side engagement for a medical device company, like we've been talking about. So what happens in these kinds of transactions is a data room is set up. So that's where the customer of the investment banking firm submits all kinds of data about their employees, their financial performance, their strategies, their customer base. And that is information that the investment banking firm uses in order to market the company. And there's no reason that data room could not reside in Salesforce in a community. It's secure. You can build process automation into it. The investment banking firm's client can use Salesforce reports and dashboards to, slice and dice data. So as these firms have adopted core Salesforce, I think what we're going to see over the years is they're going to gain a ton of value using Salesforce communities as well.
Fantastic. So we've covered a lot of ground, and we've learned a little bit about the differences and similarities between IB and PE in terms of using Salesforce. Is there one takeaway you want everybody on the stream watching to kind of remember?
Yeah, that's a good question, Ryan. I do think one key thing, and whether you are in investment banking or private equity or somehow related to this industry, we've had a lot of success building off the core Salesforce platform to meet the end-to-end business process. It's not like it's a complicated set of customizations with lots of code. It's really building out a configuration and process automation using the core tools. And therefore, we can typically deploy a private equity or investment banking firm very, very quickly in a matter of, let's say, a couple months. And they're up and running with full functionality and supporting their end-to-end process in Salesforce.
Fantastic. Well, Randy, thank you so much for joining us today on episode 8 of Sikich Salesforce Live. And we will end it there. And if you have any questions, you can get a hold of Randy on LinkedIn. You can also come to sikich.com/Salesforce. You can find a whole range of information, blogs, videos, anything related to what we talked about here today. So again, thank you, and everybody have a great rest of the day.
Thank you, Ryan.